I think investing is going to be hard, then it's going to be hard. Our next guest, ladies and gentlemen, is this person is a phenom, okay, in the finance world. She is a woman, by the way. Okay, today is women. We're starting with the ladies today. All right, is that all right? It's the women run this planet. 40 years of experiencing and identifying in the investment community that is mostly male, by the way. This person has dominated this space. She has become a renowned investor in Wall Street. She manages a $60 billion fund. She's been a featured speaker, okay, all over every CNBC, MSNBC, Fox News, Fox Business, and spoken at the World Strategic Forum. Please welcome my friend, Miss Cathie.
I don't ever slow up, no I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up. I don't ever slow up, no I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up and make a statement. I don't ever slow up, no I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up and make a statement. Everything I do so instinctive and so passionate. Every word I move so descriptive like an adjective. I got a vendetta against people who patented being negative when you should be getting after it. I got facts over tracks, this and that. Spitting slow, spitting fast. I could roast, I could gas. Think I'm okay at last, but I don't know if that can erase all the past. And the pettiness, a reflection of the emptiness. Hilarious, you think you're worth my time, you're delirious. Mysterious, because you hide behind a fake exterior. Inferior, you know I'll always be a bit superior. Get off of me, this ain't no humble brag. I want.
Should have asked about, was that your favorite music?
Oh, yes, definitely.
So Cathie, my first question, we did a Spaces together, which I absolutely loved, and my audience loved it. And one thing I do in interviews is I try not to study a person too much, because then it gets me all kind of lost in other things you've been asked. So I'm just going to ask you some things I'm interested in about you, all right? Right. How does a woman, like it's predominantly a male space, is that right?
Mm-hmm. Yes.
So like what percentage of the finance community is women?
Gosh, I don't know the answer to that. When I started, which was a very long time ago,
yeah,
there were very few women. Then we went through the 80s and 90s and the big bull market then, and we saw a lot of women entering the business, which was fantastic. And then we had the tech and telecom bust, and last in, first out. A lot of women left. And then we start again, and we get to 08, 09. Same thing, last in, first out. So very often, I will be one of the few women still in meetings. It is quite surprising.
Yeah, and so how do you, because men don't understand this, right, phenomenon, like what it's like to be in a room where you're the minority in the room. How do you move in? How does a woman operate in that space? I mean, do you have any advice for the women here? Because you're in a very alpha space in finance.
Well, a couple of things. In the space, I've had incredible mentors. Many of them men, some women. And so definitely go look for that mentor. You know, make sure that you're partnered, in essence, with someone whom you believe will allow you to grow. And it's a little bit of a quid pro quo. As you know, when I was starting in business, it was, what was my objective? My objective, when you're very young, you think you know how the world works.
Right.
And Art Laffer, for those of you who know Laffer curve, supply side economics, he was my professor at USC, and I thought I knew how the world worked. And I was going to go in and make Don Conlon, the chief economist at the time, look brilliant. And that's, I had the pleasure of meeting Sabrina and watching Scarlett. No, I met Sabrina backstage, and they have it. I can tell they have it. So you're doing something right, Elena and Grant.
Thank you.
But I think it's imbuing them with that confidence. You know, I was the firstborn of Irish immigrants. And they always treated me as the firstborn son, meaning meaning I could do anything I put my mind to. I think it's so important for parents to believe in their children, to encourage them, to give them, growth opportunities, to find themselves, and so forth. Yes.
And would you recommend that people, the kids today, would you recommend these kids, a bunch of the kids that are helping us out with our security and stuff, would you recommend finance as a place for people to go and work today?
Well, I'm going to answer that in two ways. The business I joined back in the late 70s when I was in college and early 80s, the business I joined because I said, oh my gosh, the world is my oyster. The world is our oyster. They're paying me to learn how the world's going to work. And so I just was completely taken with the business. Today, the business is very different today, and it is because of the tech and telecom bust and then the 08-09 meltdown. The traditional asset management world is playing it what they consider safe. I think they're taking a terrible risk by investing in line with benchmarks.
You're talking about the ETFs, so the Vanguards.
I'm talking about the public equity markets. Stocks are listed on the various exchanges. And there are benchmarks out there, like the S&P 500, the NASDAQ, the MSCI World. And many investors now hug those benchmarks. They say, okay, I'll be a little bit more of this and a little bit less of that. That's not investing in my world. In our world at ARK Invest, we are very focused on understanding how the world is going to work, not the way it has worked. Benchmarks and the stocks at the top of benchmarks are there because of some great success historically. But if we're in a world of disruptive innovation, the likes of which we have not seen in more than 100 years, then the risk is that the traditional world order is going to be disrupted. So that is not a place of safety. But the reason that happened was the tech and telecom bust, 08-09, and feelings of career risk and business risk. So a very defensive posture. And yet all of this innovation, the seeds of which were planted in the 20 years that ended in the tech and telecom bubble, those seeds have been germinating and they are beginning to flourish. And so this very defensive posture is inconsistent with the possibilities ahead.
So the disruptive space that, like you're not looking at what happened.
No.
You're looking, because some of the stuff that you do, I'm like, okay, when did they start making money? How does somebody have the courage to invest in something that hadn't happened? How do you do your due diligence?
Yes.
And then lastly, how do you make a bet and sleep well at night? Like,
yes.
I'm a coward real estate guy. And you're betting on companies that, how do you do that?
So ARK Invest and all of our ETFs, which you mentioned, so ARKK, ARKW, all of those are in the public equity markets, but we call ourselves the closest you'll find to a venture capital company in the public equity markets where stocks are listed on exchanges. And our due diligence is centered around something called Wright's Law, which is a relative of Moore's Law.
Okay.
So what we're trying to figure out is how quickly the costs associated with these new technologies are going to fall, and how quickly those cost declines will turn into price declines, which will enable these new technologies to scale across sectors. So we're looking at mass market opportunities caused by technologically enabled innovation that can be measured. The cost declines can be measured. We're very methodical about that. And just to give you a few examples, artificial intelligence costs today are dropping at, if you combine hardware and software, 70% per year.
How much?
70%.
70. Okay. Oh, 70.
70%.
Okay. 70.
Yes. And we see robotics costs for every cumulative doubling in the number of robots produced, dropping 50%. We're seeing battery costs down 28% on the same basis. So we center our research on that, and we're able to tell when costs will be able to fall to low enough levels that the general public will be able to afford them and become very interested, and we can scale and enjoy exponential growth trajectories.
So you're talking Tesla then?
Yes.
And electric vehicles. How does that affect General Motors competing with the Tesla? Does it help General Motors, or does it benefit Tesla?
So Tesla is first and foremost electric and autonomous. Those are the two big opportunities that Tesla is pursuing. General Motors has a problem. Its business has been centered on the internal combustion engine. And we believe that electric vehicle costs and prices are going to drop well below gas-powered car prices. Already the total cost of ownership is lower. And so GM has to make two giant leaps, one from the internal combustion
They got to
engine
kill that,
to batteries.
the assembly line.
But, you know, that's kind of tough. They
Right.
100 years.
Right.
Culturally in that world. And, you know, I have to give Mary Barra a lot of credit. When I, on a news program, said, you know, we think the traditional auto manufacturers are going to, if they're going to be around, they're not going to look anything like they do now. So she actually called us and wanted us to go visit, see what they're doing in electric and autonomous. And to GM's credit, they bought a company called Cruise Automation. And it has gone autonomous in San Francisco, now Austin, and Arizona. So they're trying, but it's Herculean.
Yeah, you're saying, so they're labored, the assets they had in the 60s, 70s, and 80s become liabilities now.
Yes.
They carry a lot of debt.
Stranded assets.
So what do they do with those assets? Do they abandon
Well,
them?
ultimately, when you get into disruption like this, what happens is the incumbents say, all right, like take online retail when Amazon came along. Well, look at Walmart today. It's bigger and better, and it has an online arm. You have a few very big survivors because the world that's being disrupted consolidates and restructures. And we think in banking it's going to be the same. You've got digital wallets we think are going to really disintermediate. Oh, there we go.
There's some digital wallets back there.
Digital wallets will disintermediate traditional banking. And we see JP Morgan and some others, Bank of America, very focused on technology and trying to make sure that they do not lose. So we will see a lot of consolidation and restructuring in the traditional world.
So you mentioned the New World Order. So how does all this electrical, the robots, how does this kind of play into that, the plus and the minus of a New World Order? And how does it affect these business owners?
So we just put out a report called Big Ideas 2023. It's on ARK-Invest.com. And you can see the building blocks. We believe right now in the global equity market, so public and private, that truly disruptive innovation is valued at about $13 trillion. So that's it's around 10% of the total global equity markets. We believe that $13 trillion is going to scale because we are ready for prime time in genomics, which we call multiomics now.
What is that?
Multiomics includes DNA, RNA, protein sequencing.
Okay.
We're really beginning to understand the causes of disease.
You're not talking about the vaccine right now. You're talking about...
We're talking about curing disease by editing genes.
Okay.
Because now we can, yes. Isn't it exciting?
Yeah.
Yes. So multiomic sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. Those 5 platforms, which involve 14 different technologies, are going to scale from 13 trillion to 200 trillion
Oh my
by
gosh.
2030. That's a 40% compound annual rate of return, which is a spectacular growth rate.
Yeah.
Now, you talk about 10x. This is your company, 10x.
Yeah.
So if these strategies are our strategies, and I'm saying if, I have a very strong compliance department here.
Right.
If our strategies were to scale 40% per year on average, and that's just the average. Hopefully
7
we're
years.
better than that. It would take 6.8 years to 10x.
Wow.
Whereas for traditional stocks, now historically the S&P 500 has delivered a compound annual rate of return of 7%. That would take 78 years to 10x, I believe. No, that's cash would take 78 years, 34 years to 10x. So
I don't want to wait 34 years.
Getting on the right side of change is so critically important because the changes are so enormous.
You shared with me about what Amazon was doing with robots per employees, and I had never heard those numbers. Will you share them?
Today, Amazon has more than 500,000 robots and more than 1.5 million employees, roughly. So their robot penetration per 10,000 people is 3,200. If you look at the manufacturing world in the United States, if you look at manufacturing, that number is only 140. We haven't even begun the movement towards robotics, but now the convergence of artificial intelligence and robotics and the sensor technologies, where we'll be covering robots with sensors so we can work alongside them, we think is going to transform the world completely, and it's going to help us with the massive labor shortages around the world.
So what does this do to labor? Like, to me, this threatens an explosion of unemployment.
No, the history of technologies, it is a net job creator. Now there is displacement.
Give me an example. Why would a new technology?
So the internet in the early 90s, we were trying to figure out, okay, what's going to happen here? And we would have never dreamt of Uber and Lyft or Airbnb, but they could not exist without the internet. Right? But we weren't thinking about them. They didn't even come along for 15 or 20 years. So the human ingenuity is amazing.
But what about when they get rid of the Uber driver?
So,
if we ever get autonomous.
And we will.
You're convinced the autonomous is going to happen?
Absolutely convinced.
Because my wife does not trust me driving.
We are going to consider automobiles weapons of mass destruction about 10 or 20 years from now. I can't believe that as a 16-year-old, when I was 16-year-old, my parents let me drive that weapon of mass destruction, right?
You were a bad driver? Or?
So I was a teenager.
Right.
I took risks.
Yeah.
But there, 45,000 people die in the United States because of auto fatalities. 80 to 90% of them are because of human error. And that number in the world is 1.5 million. So,
wow.
Yes, so this is going to save lives. Innovation solves problems. Innovation solves problems.
So what do you say to the critics, to those that are like, okay, she's too aggressive, she takes too many risks, she's too in the future, the fund's down, like when you have those moments and it's down or it's up, like how do you handle the critics, the naysayers, the haters?
Well, it actually, in a strange way, makes me feel better because being in the tech and telecom bubble was extremely uncomfortable. We knew that valuing companies on the number of eyeballs they might have watching them in 10 years was wrong. And today, and the reason that bubble happened is the internet lit a fire, the genomic revolution, personalized medicine, but the technologies weren't ready, the costs were too high. Now the technologies are ready, the costs are too high. What happened back then? Investors just chased the dream, but it ended badly. Now they're running away from the reality, and we think that is going to end badly as well.
So you're talking about what happened with crypto then, recently, that pullback, the NFT. Were you a proponent of the NFT space? And are you now?
Oh, still are. Yes, NFT space, very much so. No, the crypto revolution is not
So
dead.
talk to me. How many crypto people here? Oh my God, we got some cryptos.
And 3 revolutions in one. We've got the money revolution. That's really Bitcoin and Ether. And that is what Art Laffer, my mentor, said, oh my gosh, this is the rules-based monetary system I've been waiting for since we went off the gold exchange standard in the early 70s.